All right, what's up, econ students? Welcome to the circular flow diagram. I'm Mr. Sandsgaard. We're going to be talking about markets, right? And what the circular flow diagram is showing the flow of goods and services and the flow of money that acquires those goods and services. So up and down there, you see the resource market and the product market. Okay, the resource market is also called the factor market. This is our land, labor, and capital. And today we'll kind of focus on labor, but it also, just to understand that individuals also provide capital and land when we're talking about the resource market as well. The product market, we're really just talking about places where you buy and exchange goods and services. So today we'll talk about a grocery store, all right? Businesses are where things are produced or organized for the goods and services. Then individuals are just people's sort of spending habits that they have. Okay, so we're going to start with businesses. But businesses produce goods and services to a product market. All right, so let's say I'm hungry and I'm an individual and I want bread. Okay, I head to the store, Hy-Vee or Cub, and I go and I purchase some bread. All right, that business is providing that bread to a store or a product market, which then goes into my household. All right, I take my money then, I give it to the product market, right, and they give that money back to businesses. The money that I give them as the individuals will be spending, and the money that the business is pulling in will be the revenue. All right. Now, in order to gain a profit, the business is going to have to make sure they make more revenue than the cost that they have. So in this case, the business is supplying goods and services, all right, while the individuals are demanding goods and services. But where do individuals get the money to get all those individual goods and services that they want, right? Well, they have to go to work, okay? And they do that in the resource market. So every day individuals get up and they go to work and they get money and they use that. So let's say I work at I want bread, but I work at a peanut butter factory, right? So I go into work every day and I make peanut butter, all right? So I provide my services, smashing up peanuts to make peanut butter. They then take that and that product that is created is then given to the business, which then goes to the product market, and then individuals will buy that. All right. The business will then pay me for the services that I do. All right. That's a cost to them. All right. But it's an income to me. So now I take my income, I go and I spend money getting bread. That money becomes revenue that they then take to pay their employees, who then have income now to buy more goods. So in one way, you see the money flowing, all right, one way, while goods and services are flowing the other way, right? Now, if you're looking at an economy that's really good, both of these circles would be moving really fast. If the economy is going slower, okay, or slowing down, you would imagine that these things are going down, right? So if myself and the peanut butter factory, everybody gets shut down, well, that's a big deal, right? Because now a bunch of us have lost our income. So now we might not buy as much bread, which means that the bread business won't get as much revenue, which means they might have to start laying people off too. And so you can see, just imagine these arrows kind of speeding up and slowing down when our economy is good and bad. All right. So supply of goods or the resources come from individuals, and the demand come from the businesses. In the middle of all this is you have government. Now, government actually provides about 20% of our real gross domestic product. All right. They actually purchase goods and services, both from the product market and the resource market. In exchange, they give money. Our government doesn't make a lot of stuff, right? With the exception of some of our more of certain programs like education, things like that, military, It's not necessarily government run. All right. So what they do is they purchase things. They purchase resources from the resource market and products from the product market. All right. And they get money in to do that. They also provide public goods. Public goods would be things like roads, lights, bridges, that kind of stuff. All right. Not a lot of money in the private accounts to do that. So government a lot of times has to provide that. And of course, where do they get the money? They get that through taxes. So they tax both businesses and individuals in order to provide those public goods. And at the same time, too, they will supply money to keep the economy going in certain ways, right? So during the COVID-19 crisis, individuals got checks, stimulus checks, to the tune of about $1,200 each for an adult. And some companies get subsidies, all right, to make sure that they don't go under. So like the airline industry got a big subsidy to make sure that they could keep production. All right. And that would be pretty standard. So let's say things were slowing down. We see a lot of cyclical unemployment. The government a lot of times will push out welfare and subsidies in order to keep those things going. So that is your circular flow diagram.